Hi and welcome to the Money Minute. I'm Devin Shute. Last week we had Finance Minister Enoch Godongwana table the medium-term budget policy statement, or mini budget for short. Now, he delivered this in really difficult conditions, and I described the budget overall as pretty reasonable. Highlights of his speech included additional revenue that they received of almost 84 billion rand, and this came from financial and manufacturing company taxes. The debt trajectory of the government as a whole is moving lower as a result, and we're in a significantly better place than we were over the past few years. They also tabled a 3% wage increase for public servants, and this is admirable, but is going to be highly contested by unions in the upcoming negotiations. However, there were also some concerns in the mini budget. First of these were state-owned enterprises, and here Denel and Transnet received additional financial support, but there are ongoing issues there that haven't been resolved. And the big expected announcement from Eskom and their debt being moved to the government, or at least a portion of that announcement's been delayed until the February budget. The Social Relief Distress Grant has also been extended by a year to March 2024, but seeing as that 2024 is an election year, it seems unlikely that this will not be extended, I should say. Questions around the ongoing funding of this grant remain. Overall, the markets and the ratings agencies were really encouraged by a prudent budget, given the difficult global and domestic conditions. However, as well as we can manage our budget, there is no substitute for growing our economy. And unfortunately, there was very little evidence or political will to alter our economic policies to facilitate this critical economic growth, which remains the biggest missed opportunity. However, global governments are also not getting this right. One just needs to look at the self-inflicted economic crisis unfolding in the UK, where they now have their third Prime Minister in just over 4 months, and this is a clear lesson on what can happen to any government who commits significant policy mistakes. Then to other news. In much anticipated news now, the South African financial regulator, the FSCA, announced that crypto assets will now become regulated financial products. This is really a watershed moment for crypto players in the country, and that has been celebrated with regulations bringing protection for investors and a professionalism into the industry. At TRG, we also welcome the announcement, as clients will benefit from the increased protection and responsibility of providers when people invest in this asset class. Now, TRG has a managed crypto fund that has a 4-year track history, and we've been managing this in expectation of the regulations which are now in place. We think the fund can play an important role for suitable investors' portfolios with an appropriate allocation. If you want more information on this, we're including a link in the notes, as well as our website. You'll find it there. So thanks as always for watching. Please remember to like and subscribe, and have a good week.